What is good, YouTube? Channel FX back. Happy New Year's to you. 2024 is here. Man, for you all who don't know, 2024 is a very personal year to me when it comes to the grind. Alright? And it's just been about 3 days into the year, and we've caught our first trade of about 200 pips on gold. If you really want to know how I caught this move on gold, stick around to the end of the video because I'm about to break it down in a minute. Alright? Also, if you haven't yet subscribed to this channel, make sure you hit that subscribe button, make sure you hit that like button, make sure to drop a comment down below. If you're also interested in enrolling my one-on-one mentorship, just DM me on Instagram, the link is in the description below. So with that being said, let's just get to business. So now, starting from the H4 time frame, right? What did I do first? What was my top process? So the first thing I did was to identify my trend. The first thing I did was to identify my trend. And looking at the charts, what trend are we in? We're in an uptrend. It's clear as day, right? We're in an uptrend. Good. So after I've identified my trend, the second thing I did was to identify my market structure. What did I say I did next? The next thing I did was to identify my market structures. So going into the chart, let's identify our market structures. So what do we have? We have this lower low here. Price came back up to create a new lower high. Came back down to create another lower low. Why is this our lower low? Because this low is lower than that of its previous low. So now this becomes a new lower low. After this low was created, what did price do? Price pushed up to create a new higher high. Why is this a higher high? Because this high is higher than that of its previous lower high. So now this high becomes our new higher high, or this high closed above this previous lower high. So now this becomes our new higher high. So after this higher high was created, what did price do next? It came back down to create a new higher low. Why is this a higher low? Because this low is higher than its previous low. So now this becomes our new higher low. After this higher low was created, what did price do next? It pushed back up to create a new higher high. Why is this a higher high? Again, this high is higher than its previous high. So now after this higher high was created, right, what was I expecting price to do? I was expecting price to come back down to retest its previous higher high as a support and continue to push back up. So for you who don't know, in a bullish trend, right? In a bullish trend or in a bullish market structure where we have higher highs and higher lows being formed, what we expect is anytime price breaks above its previous lower high or higher high, we expect price to come back to retest that previous lower high, which is also a resistance, as a support to then push up to continue the trend. You get what I mean? So that was the same thing I was expecting. I was expecting price to come back down to retest this higher high as a new support to push back up to create a new higher high. So in case price does this, it means here becomes our new higher low and here becomes our new higher high, right? So in case price is able to create a new higher high, what are we expecting price to do? Come back down again, retest this previous higher high so we can continue back to the upside. Do you get me? Vice versa for a downtrend, or vice versa in a downtrend, or vice versa in a bearish market structure. Beginning. So the first thing I did was to identify our trend. The second thing I did was to identify our market structures. And then third thing I did was to identify our key levels, which is marking our previous higher high as a resistance level and waiting for price to come back and retest that level as a support to push back up. You get me? Good. So now how did I even catch the 200 pip move? Now let's go down to our H1 time frame, which is our lower time frame, so I can teach you how I got my entry, right? All right. So now coming down to our H1 time frame, right? Coming down to our H1 time frame. What did I do? What was the first thing I did? Since we were trying to sell in an uptrend, or since we were trying to catch the retracement in an uptrend, or in a bullish market, or in a bullish trend, when I came to the H1 time frame, all I did was to wait for a shift in structure of the H1 trend or the H1 structures. What did I say I did? I waited for a shift in structure of the H1 market structures. So first of all, let's identify the H1 market structures. So starting from here, right? Starting from here, what do we have? Starting from the left side, what do we have? We have higher high, higher low, higher high, higher low, higher high. Alright. After price created this higher high, what did it do next? It came back down to what? To create a new lower low. Why is this our new lower low? Because this low broke below or its previous higher low and created what? A new lower low. So now this was the confirmation we got that the H4 time frame has begun its retracement. Right? Since the H1 time frame, or since the H1 market structure shifted from bullish to bearish, it gave us the confirmation that the H4 time frame has begun its retracement. So after price created this lower low, what did it do next? It came back down to create a new lower high. So after this lower high was created, what did price do next? It came back down to create a new lower low. After a new lower low was created, what did price do? It came back down to create a new lower high. After price created this lower high, what did it do next? It came back down to create a new lower low. After this lower low was created, what did price do? It came back up, created this new lower high, and created what? A new higher high. Why is this a higher high? Because this high broke above this lower high. Alright, so after price created this higher high, what did I do next? All what I waited for was for price to come back down to what? To close below our current higher low. For the H1 to still be in a bearish market structure. So yeah, price came back down, broke below this higher low and created a new lower low. Alright, good. And like we did on the H4 time frame, after we've identified our market structures, what next did we do? We identified our key levels. So like I said earlier, in a bullish market structure, we wait for price to retest a resistance to become a support, or we wait for a previous higher high to be retested as a what? As a support, so we can continue going up in a bullish market structure. But in this case, the H1 was buried. So what are we looking for? We are looking for support to become what? Resistance. What did I say? In a bearish structure, we are looking for what? Support to become resistance. So now, this was the key level I identified. Alright? You see how price came back, it created a resistance. Resistance became support, 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 broke below. So after price broke below this key area, what were we waiting for? We're waiting for a retest of this support area to become what? A resistance area. So we can continue back to the downside. Alright. So after price came back to retest our support as a resistance, what next did we wait for? We waited for our candlestick confirmations. So we can go in for shorts, or so we can go in for sells. So after price retested as a resistance, what are we waiting for? What candlestick pattern can we see here? We can see what an evening star candlestick formation pattern. There was an evening star candlestick confirmation pattern. So an evening star candlestick confirmation pattern consists of 3 candlesticks, right? If we are to look very closely, we have this bullish candle, which was followed by what? A doji, or some people might, or some traders might call it an indecision candle. After this doji was formed, what next candle printed? A bearish candle. So now this 3 candlestick pattern is called what? An evening star candlestick formation. You get what I'm saying? So after we had this confirmation that price is about to move to the downside, or price is ready to drop to the downside, that's when we entered our trade. And we placed our stop loss right above this lower time frame structure. If you are to go on the lower time frame, you realize this will be a structure on the lower time frame. Again, so I placed my stop loss right above this lower time frame structure, and my take profit to our H4 key level. Yeah, so we placed our stop loss above this lower time frame market structure, and our take profit at our H4 key level, which gives us a risk to reward of 1:3.3, risking 68 pips to make 218 pips. You get me? As simple as that. So this was how I was able to catch over 200 pips on gold just 3 days into the year. You get me? Yeah, so in case you don't understand anything I did, you can go over the video and watch over and over again till you understand. Alright? And like I said earlier on, if you want to be able to catch moves like this, just DM me on Instagram to get yourself enrolled in my one-on-one mentorship. Alright? And also, if you haven't yet subscribed to this channel, make sure you hit that subscribe button. Make sure to drop a comment down below, and make sure to like this video. So with that being said, I'll see you in the next video. Ciao, next friends. Peace. I'm out.